Japan's leading trade negotiator has abruptly cancelled a planned visit to the United States, sparking concerns over unresolved issues in the ongoing U.S. Japan trade agreement. This unexpected move highlights the complexities and tensions still present in what many hoped would be a smooth negotiation process. Ryosei Akazawa, Japan's Minister for Economic Revitalization and the chief trade negotiator, was scheduled to travel to Washington, D.C. to discuss critical aspects of the trade deal, particularly focusing on U.S. tariff policies. However, the trip was called off on Thursday after it became clear that certain technical details required more in-depth discussions before any face-to-face meetings could proceed. Japan's Chief Cabinet Secretary Yoshimasa Hayashi explained to reporters that while the visit was intended to address U.S. tariff measures, ongoing coordination revealed unresolved points that needed further administrative-level dialogue. As a result, the decision was made to postpone the trip and continue negotiations through bureaucratic channels for the time being. Japanese news agency Kyodo News reported that no new date has been set for Akazawa's visit, leaving the timing uncertain. Meanwhile, Reuters cited an anonymous government source suggesting that the negotiator might still head to Washington as early as next week, once the outstanding issues are ironed out. One of the main sticking points involves Tokyo's push for the U.S. to revise its presidential order on reciprocal tariffs. Japan is urging Washington to formally issue an executive order that would reduce tariffs on automobiles and auto parts to 15%, down from the current 25%. Although the White House has an executive order establishing a 15% baseline tariff rate for Japan, there has yet to be a written confirmation specifically lowering the tariff on vehicles. Back in July, Akazawa mentioned that the U.S. had promised to amend the executive order to include a no-stacking provision. This means tariffs would not accumulate beyond the 15% threshold, preventing additional layers of tariffs from being applied simultaneously. This arrangement mirrors a similar agreement the U.S. has with the European Union, aiming to create a fairer and more predictable trading environment. We have confirmed with the United States that a sincere and prompt implementation of the Japan-U.S. agreement is vital, Akazawa emphasized during his statement on Thursday. Adding to the economic concerns, Bank of Japan board member Junko Nakagawa weighed in on the situation, noting that despite progress in tariff negotiations, significant uncertainties remain. Nakagawa warned that Japan's exports and industrial production are expected to face short-term setbacks due to the front-loading of U.S. tariffs, which means companies rushed shipments ahead of tariff increases, causing a subsequent decline. She also highlighted that corporate profits, especially in the manufacturing sector, are likely to suffer. This is attributed to the combined effects of reduced export profitability caused by higher U.S. tariffs, and a slowdown in global economic growth. On another front, a major topic on Akazawa's agenda was the formal confirmation of Japan's massive $550 billion investment package in the U.S., which is part of the broader trade deal aimed at securing tariff reductions. This package represents a significant financial commitment from Tokyo, intended to stimulate economic cooperation and balance trade relations. U.S. Commerce Secretary Howard Lutnick recently indicated in a Fox News interview that an official announcement regarding this investment package would be forthcoming, signaling progress but also underscoring the deal's complexity. The $550 billion investment was unveiled alongside the July trade agreement, which notably reduced reciprocal tariffs on Japanese exports from 25% to 15%, including key cuts in the automobile sector. However, the investment package has become a point of contention, with some critics claiming Japan is simply handing over a vast sum of money without clear returns. Akazawa pushed back against these claims, stating, "Some people are saying Japan is simply handing over $550 billion, but such assertions are completely off the mark." He clarified that the profits generated from these investments would be shared between Japan and the U.S., proportionate to each country's contributions. He also acknowledged that the U.S. is expected to contribute a larger share, reflecting its role in the partnership. But here's where it gets controversial. Is Japan truly benefiting from this massive investment, or is it conceding too much in hopes of securing tariff relief? Some argue that the deal disproportionately favors the U.S., raising questions about the long-term economic impact on Japan's manufacturing and export sectors. What do you think? Is this trade deal a win-win for both countries, or is Japan making too many concessions? Share your thoughts and join the conversation below.